Welcome, Bitcoin friends. It's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, do some TA, look at various time frames. We'll take a look at market cipher, and we'll also compare the cycles for Bitcoin. So let's start with comparing the cycles for Bitcoin first off. This is the entire history of Bitcoin here. And in our first chart, what we're going to do is compare these three boxes here. This is basically taking it from the bear market low to the next bear market low. And we have these three cycles, yellow, red, and blue. So here we are with the same colors, the first cycle in yellow, second cycle in red, and our current cycle in blue. On the bottom axis here, we have the number of days, and on the left axis, we have the percentage gains. We can see, obviously, with that first cycle, we had a higher percentage gain, but we see going from the bear market low to the next bear market low on this first cycle took us around 1150 days. The second cycle took a bit longer here. This is around 1420 days. It has been around 1300 days since that previous bear market low. And we do see diminishing gains with each of these cycles, but we do see our current cycle does sort of lie in the range between both of the two previous cycles when looking at the number of days. We also see that final capitulation into the bottom of the bear market on the first cycle here in yellow and the second cycle in red. And we have had a big capitulation also with our current cycle here. We do see some similarities here with this big drop at the end of the cycle. It's just good to compare the three to get that comparison. So now we're going to look at it from a different starting point. Instead of using the bear market low, we're going to take it from the halvening date. Each of these white lines represents the halvening date. So we're going to look at it from that halvening date to the next bear market low. Again, we have the first cycle in yellow, second cycle in red, and our current cycle in blue. And when we plot all those three on the chart, we see that first cycle in yellow, second cycle in red, current cycle in blue again. And again, we see diminishing returns with the percentage gains. And looking at the amount of days here, we can see we're pretty much in line with that first cycle, taking it from the halvening to the next bear market low, around about 780 days here. The second cycle did go for about 880 days till we reach that bear market low. And again, we see that possible final capitulation on all three cycles. So now we're going to actually look at the percentage drawdown from the bull market peak. And with our current cycle, we're going to look at both of these peaks because when looking at a lot of indicators, it does indicate that the peak in April of 2021 was actually the bull market peak, even though it did make a higher high here. Technically, this is the bull market peak, but it is a bit of a double top. And a lot of the interest did leave the market after this peak here and that 50% drop. So we're going to look at both of these peaks when comparing the three cycles. Again, first bear market in yellow, second bear market in red, and our current bear market in blue. So putting them all on the same chart here, that first bear market in yellow here, we can see the percentage drawdown here on the left. We dropped approximately 83%, and that took about 410 days here. The second cycle in red, we also dropped around 83%. This one was a bit quicker, around 360 days. And our current cycle in the blue, which has gotten as low as around 71, 72% here, has also taken longer, approximately 440 days. And again, we're using that first peak in April of 2021. We saw we went slightly higher here with that second peak. The percentage drawdown is less so far with this current cycle. And again, we didn't have a full blow off top like we did with the previous two cycles. So there's also that theory that perhaps our drawdown won't be the full 80 to 83%. And finally, we're doing the same comparison here, but we're using that second peak here rather than that first peak. And we see this gives us a slightly different chart using that second peak. Again, those first two cycles are the same here, but with our current cycle using that second peak at 69K, we can see we did draw down around 72% here. We currently have been in the bear market for around 230 days. whereas the previous two cycles were around 360 to 410 days. So it is interesting to look at both. Just going back to the previous one, you can see this one did diverge quite a bit from the previous two cycles. But if we use that second peak, we do seem to be in line with the same percentage drawdown as our second cycle in red here. The first cycle took a bit longer to get down to that 70% drop. Personally, I am favoring more using that first peak, as I am seeing some signs that we're possibly pretty close to the bear market low. And again, if we did have a blow off top here, this starting point would be a lot higher. And this bounce here, if we classified it as a dead cat bounce, would be more in line with these cycles. But it is open to interpretation, and I've presented the data, and you can take from that what you will. And one last thing, when looking at these halvening dates, the next expected halvening date will be around April of 2024. And if we were to look at the number of days here that we bottomed out compared to the next halvening date, you can see with this first bear market low here, it occurred 542 days before the next halvening. With the second bear market low here, it occurred 523 days before the next halvening date. And if we were to look at a similar thing with our current cycle, currently we are around 650 days until the next halvening date. This halvening date isn't cemented, it can change. So there could be a plus or minus 50-day gap on that one. And if we were to take the average here of around 535 days until the halvening to the bear market low, that would put the bear market low around the start of November. And again, we don't have to do the same thing, but it is interesting to compare the different cycles here. And onto the 2-week time frame. We did just open a new 2-week candle this week, but the main thing we're looking at here is the RSI, and we're just looking at the previous cycles with their bear market lows here. And we are watching this key level on the RSI around a 46 reading. And we noticed when we do break this level on the RSI, we do enter that final capitulation into the bottom of the bear market. And once we do reclaim that 46 level, we start the next bull run. We saw that with both of the two previous cycles here. And generally, when we break this 46 level on the RSI, we have around a 50% drop into the bottom of the bear market. And just looking where we are currently on the RSI, we can see we're around a 34 reading. And this blue box down the bottom here just marks the range of the previous two bear market lows. So we can see we are in that similar range of the bear market lows. And I've also just put these boxes around the areas where we spent time below this level on the RSI. And we can see I've just taken it from the closing price once we did break below that level. In the first cycle here, we saw around a 55% drop. The second cycle, a 42% drop. Our current cycle, we're down 47%. And on the first cycle, we spent 392 days consolidating here around the bottom of the bear market, below that 46 level on the RSI. Second cycle was 147 days, so a much shorter amount of time. And currently we've spent 70 days below this level on the RSI. So I am expecting a similar thing. I think we're going to spend time in this box here, as we do need to form a base if this is the bottom of the bear market. And going down to the weekly time frame now. First thing I want to point out here is we do have a couple of weekly order blocks here around 1920k. Just got them marked with these white lines. These order blocks come from a red candle in an uptrend. They're areas of supply and demand. It was a stop in the trend, so there were buyers and sellers here, and time was spent here, and therefore volume. And these order blocks can act as areas of support or resistance. But what I want to point out here is just looking at the VPVR, the amount of volume traded at certain price levels. What we can see here is a massive spike around the area of these order blocks. We actually see the volume here is bigger than all the previous volume spikes at certain price levels. And we'll just zoom in to be able to show you that properly. So just zooming in on that now, we can see those two order blocks from both of these red candles. And we see here a massive spike in the VPVR. We are currently above that area. So it shows that a lot of money was trading hands here with buyers and sellers. And it is interesting that the amount of volume that changed hands here is bigger than at any other price level above this level. So this could act as a key area of support, and it is also in line with that weekly order block. We do see we had these wicks down and they have been brought back up, and we have still closed these weekly candles above this area of support. We do also have this falling wedge pattern connecting the all-time high here. We have 2 touches on the top, 2 touches on the bottom. Generally on the third touch on the upside, we break bullish, although this may take quite a while here as we spend time forming a base with a possible breakout sometime in early September. We do also have a white dotted trend line here, just connecting these 2 highs. This will be an area we look to break above first, perhaps break above it, come back and retest it. And that would give some confidence that perhaps this was the bottom down at 17.5k. Now we do also have a new weekly order block here from this candle. This order block is between 20.5k and 21k. So this area may act as resistance here. But if we are able to reclaim it and use it as support, again, that would give confidence that perhaps this was the bottom. Looking back at the 2018 bear market here, we did also see after this final big capitulation here, we did make a weekly order block here, and this did act as resistance here on the first few attempts. Once we did reclaim it, we started the next bull run. So this could be a key order block to keep an eye on here. Perhaps we spend some time getting resistance, and eventually if we do break it, again, it would give extra confidence that perhaps the bottom is in. And onto the daily chart now for Bitcoin. We do also have a daily order block here, this white line coming from the same area where we have those weekly order blocks. And just zooming in, that's that order block down here at around 18.5k to 18.3k. And we also have an order block from this green candle in a downtrend. That's at 20.4k. We can see this acted as resistance on this push higher. But for the time being, we are making higher lows here. But we do also have the daily EMA ribbon here, which may act as resistance if we do push higher. We can see previously it acted as resistance here as we did try to push higher. So that's something to watch out for. And in the previous video, I think we were somewhere around this area. And I was mentioning we may get some possible bullish divergence. We needed to close lower than the previous low here, looking at the bodies of the candles. But we did push back up higher and close higher here. So there is no bullish divergence on the daily. We see higher lows on the RSI and higher lows on the price action. However, on the Bitcoin futures chart, we did actually have bullish divergence on the daily time frame. However, if we look on the 2-day time frame here, we saw that we did make lower lows on the price action while making higher lows on the RSI. Only just slightly here, but this is bullish divergence on the 2-day time frame. So we could see a bit of follow through here, perhaps coming into that daily EMA ribbon and then maybe getting some resistance there. But let's just take a look at the Bitcoin futures chart on CME now. We were watching this gap that was formed from way back at the end of 2020. We did mention previously that I think we're going to come down and fill that gap. And we pretty much filled that gap. We did come down, and an attempted fill is good enough for me, especially when most of it gets filled like that. And we did see a bounce out of this gap area. And just looking at the RSI, we can see, as mentioned, we did make bullish divergence on the futures chart on the daily time frame. We see higher lows on the RSI while making lower lows on the price action, looking at the bodies of the candles. We do see the stochastic RSI coming up here. We did get above this 20 level, so perhaps there's a bit more to go on this move to the upside. But let's look at the previous times that we were at 20K here. Obviously at the previous all-time high in the 2017 bull run, and also on the way up in our current cycle here. So we're just going to compare our current price action levels with first this area and then this area back at the end of 2017 to look at some key levels. So first we're going to look at this area and our current price action. This is on the 3-day time frame on both charts. This is the end of 2020 as we were going up in that bull run. I've just marked out the bodies of the 3-day candles here. We do have a 3-day order block here around 18.6 to 18.7K. And this is our current price action on the right. We can see we have wicked down twice here into this area, but we haven't closed a 3-day candle below the tops of these candles yet. So for the time being, this area is acting as support. And also this order block has acted as support as we have wicked into it. And the top of the bodies of these candles is at 19,178. So now comparing it here on the left is that run up at the end of 2017, the bull market peak around 19.6K. And again, this is the 3-day time frame. We also have a 3-day order block here and here. This one is at 16.6K. This one's all the way down at 15K. I'm not expecting these lower levels, but just to look at the previous all-time high here, I've marked out the bodies of the candles again of each of these levels, the drop down and also the dead cat bounce. But we can see how that previous all-time high for the time being is acting as support. We haven't closed any 3-day candles below that level at 19.1K. The next thing we're going to look at is the hash ribbon indicator. This is the 2014-15 bear market here. And we notice that we did get this buy signal here on the hash ribbons. And when that did appear, it did indicate that the bottom of the bear market was in. We also had that during the 2018-19 bear market. We can see once we got that buy signal, it indicated that the bottom was in. And so comparing to our current bear market here on the right, this was a 69K top up here. We can see the hash ribbon indicator started flashing here while we're at 30K. We don't have that buy signal yet, but we are waiting for that to appear to give us that confirmation that the bottom of the bear market is in. We also have down here the weekly time frame for market cipher. And we see we also got that major green dot on the weekly time frame here just before that buy signal as the miners were capitulating. And both of these together did indicate that the bottom was in. Just looking at our current price action here, we're seeing that same miners capitulation. And we have also just printed a weekly major green dot. It won't be confirmed until the start of next week. As long as we stay in this range, it will get confirmed. But there are some similarities here between the bottom of the 2018 bear market, where we got the weekly green dot, and hash ribbon indicator was starting to flash. So this is quite interesting. We can also look back at the 2014-15 bear market here. And we saw we did get a major weekly green dot around this area, but it wasn't the bottom. We did have one more drop down. But if we use this in conjunction with the hash ribbon indicator, we can see the second major green dot on the weekly time frame did come slightly after that buy signal on the hash ribbon indicator. So perhaps we are doing a similar thing here with this weekly green dot. We don't have that buy signal yet, but it does seem to be getting closer here. Again, we'll look on the weekly time frame and the 2-week time frame for these major green dots. And if we do change this now to the 2-week time frame on Market Cipher, we can see we got that major green dot here. That was our only major green dot, whereas the weekly gave us a major green dot up here. We had one more drop. So for that extra confirmation, we're going to look for that 2-week major green dot as well as the buy signal on the hash ribbons indicator. to confirm that the bottom was in. So we can see we don't have that 2-week major green dot yet with our current price action, but we are getting closer and closer to that. We do have this week and next week before the new 2-week candle opens. So we'll have to watch out for that major green dot to appear, and also this buy signal on the hash ribbons indicator. And just to show you that with the 2-week major green dots here, we can see we got it here in the 2014-15 bear market, indicated the bottom was in, also in the 2018-19 bear market. So we are waiting for that to appear. It could take another 3 or 4 weeks, maybe even 6 weeks, depending on what the price action does. But we are seeing that weekly major green dot here appear. And again, we have to wait for the start of next week to confirm that. So now just looking at the 5-day time frame, we did get a major green dot, and it did get confirmed at the end of yesterday's close. And looking at the 6-day time frame, we don't have that major green dot yet, but we do open a new candle at the end of today's close, and I think that green dot will most likely appear. It won't be confirmed though until the 12th of July. Around the same time we can possibly confirm that weekly green dot. So just putting all that together now, we have market cipher here. On the first row is the 1-day time frame, then the 2-day, the 3-day, the 4-day, 5, 6 weekly, and 2-week time frame. And just to show the build up of those green dots going from the smaller time frame to larger time frame. And we see we have those green dots on the 1-day, 2-day, 3-day, 4-day, 5-day, and weekly time frame now. That 6-day time frame, we will see that green dot tomorrow. But we can see how these major green dots build up on the time frame as we approach the bottom of the bear market. This is 2018 bear market. The 2-week major green dot here confirmed the bottom was in, and also 2014-15 bear market, where we did build them up a few times. We got up to the weekly time frame. We had one more drop, and that's why we're looking for that 2-week major green dot to confirm the bottom of the bear market. So I think that's about all. Hope you enjoyed that analysis on Bitcoin Mamo. See you next time. Bye.